So I'm Luke Alexander, President and CEO of Newcore Gold. We're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by very robust economics that we put out in a 2021 PEA. We are in the process of updating that PEA to incorporate a larger resource that we put out in March of this year. If you're looking at Newcore today, you're buying it at multi-year lows. We're trading at about $7 per ounce in the ground, less than 0.1 times the NPV of the project, and about half of the cash that's been invested in the project in the last few years. So we've sold off along with the rest of the market, and I think this is a tremendous buying opportunity for anyone who's looking at Newcore today. With that, I guess I should probably highlight that I will be making some forward-looking statements, so I'd encourage you to go to our website and have a look at that. I'd also encourage you to follow us on any of the social media platforms that you use. We're very active, and a lot of our shareholders and others have found that useful. So I guess to kick things off, Newcore Gold management and board are truly aligned with shareholders. We own 20% of the business today, and that's stock that we've bought alongside investors over a number of years. My average cost base, to put it in perspective, is about twice of what Newcore is trading at today. So we're very well aligned to ultimately see the success of this company. As I mentioned, we have put out a PEA on the project, which outlined very robust economics. I'll talk about that in a little bit of detail. And Ghana is a Tier 1 jurisdiction to be operating in, and we'll get into some of that detail as well. We've got a very good capital structure, about 173 million shares outstanding. We're very well backed by a number of Tier 1 institutional investors, about 45% institutionally owned today. Franklin Templeton owns 10%. They're our largest. Ruffer's at about 7%, and then a number of other institutional investors who make up that 45%. We've got a good cash balance for a company of our size, about $4.5 million in the bank today. So everything that I'm going to talk about, we are fully funded for, which is important. Ghana is a Tier 1 jurisdiction to be operating in. What I always tell people is don't listen to me as a biased CEO of a single asset mining company, but look at what the major companies are doing in Ghana. You've currently got 3 of the top 10 largest gold producers on the planet with significant operations in Ghana. Anglo Gold, Gold Fields, and Newmont are all very active in Ghana. Newmont is putting another $1 billion into Ghana. Pre the Newcrest acquisition, that was going to take them from 14 to roughly 18% of global production coming from Ghana. They can invest in any jurisdiction, and they're happy to have that kind of exposure, which I think speaks for itself. We've also seen a huge amount of M&A activity in country, which again, I think further supports what a desirable jurisdiction it is for companies to be getting into. There's 2 prolific gold belts in Ghana. 200 million ounces of gold historically discovered in Ghana. You've got the Ashanti Belt, which obviously has some of the biggest gold discoveries ever, including Obuasi at 66 million ounces, Tarkwa at 25 million ounces. And then you've got the TSXV Bibiani Belt, which is where we're situated. Very good neighbors along trend from us. You've got Bibiani and Chirano with historical endowments of 6.5, 5.5 million ounces. And then here's that Newmont asset that I was talking about, the Ahafo project, where they're investing another $1 billion and sits at 20 million ounces today. So very large deposits along trend from us. Our project, it's a district scale exploration project, 216 square kilometers in size, so a very large land package. We've identified 25 targets to date, of which we've only drilled on 9 of them, and 5 of them make up our current resource. So 25 targets, 9 of them we've drilled on, 5 of them make up our resource today. Large land package, as I mentioned, 40 kilometers from the north to the south. And where the mineralization sits is you get these shears that go through our property and other properties along the TSXV Bibiani belt. And the total shear length, if you add it up, is about 100 kilometers. Sometimes people think of projects in Africa as being in the middle of nowhere. That couldn't be further from the truth for our project. We've got very good infrastructure. We've got a paved road and power line that runs right through our project to the town of Enchi. Enchi's got about 15,000 people. So it's got all the support services we could want. It's got high schools. It's got university campus. We house all of our employees here. So obviously all that helps from a CapEx perspective. But also importantly, it sits about 15 kilometers outside of town as a crow flies, that we don't anticipate any issues when it comes time to developing it. Sitting 5 kilometers outside of the town of Enchi is where our core shack sits. We've actually just doubled it in size given all of the drilling that we've done over the last few years. But this really illustrates the infrastructure that we have to leverage off of. Power line, you can drive 60 miles an hour along this road. We've got gas stations, cell phone towers. You then drive 15 minutes down this dirt gravel forestry road and you're standing on top of our Boyne deposit. Another 15 minutes from there, you're on top of Sium. So again, very good infrastructure for us to ultimately leverage off of. As I highlighted, it is a district scale exploration project. So 5 of the areas is where our resource currently sits. 740,000 ounces of indicated, another 970,000 ounces of inferred. But we've also got huge district scale exploration potential as well. So some previously drill tested areas, as well as some greenfield discoveries that we've made on the project. Why that exploration is important is because when you look at a number of these greenstone hosted deposits along the Sefwi-Bibiani belt from us, what you'll see is where they really grow in size and increase in grade is as you start to drill deeper. What you're looking at here is a long section of our Enchi project. You then compare that to Chirano or a Bibiani or a Hafo. And what we've done is we've superimposed the depth of the pits that currently constrain our 1.7 million ounces, and they average about 80 meters. When you then compare that to other deposits along trend, where you'll often see them really grow in size and increase in grade is as you start to drill deeper. We have put a few deeper holes into our project and had some very good success with those holes. Good example of that would be at our Nyam deposit, where about half of our 135,000 ounce underground resource sits. When I take you into the deposit, I'll be able to highlight some of the intercepts that we've had. So here at Nyam, when we look at this long section here, as we got below the pits that again constrain the heap leachable material on our project, we hit 5.8 grams over 7 meters, 5.6 over 8, 5.4 over 9. This hole here at 6.6 over 4 meters doesn't sit within our resource because it was drilled subsequent to that resource coming out. So we feel that we've started to intercept some of these high grade chutes that plunge at depth. When I take you into the block model now, take away some of that lower grade material, it's pretty clear to see where some of these chutes are starting to form on our project. Those holes that I was just highlighting to you sit in this central area. If we go 500 meters to the south of that, again, zooming in here, 3.2 over 9, 7.4 over 8, 3.5 over 9, 6 over 6. So with confidence, if our VP of X was standing up here, he would talk to you about how we've identified one of these high-grade chutes that ultimately plunges at depth. Importantly, we're still only down at about 250 meters below surface, so lots of room to continue chasing that to depth. As I mentioned, we did put out an updated resource in March of this year, so we're currently sitting at 740,000 ounces of indicated. That's key for us. So we have de-risked the ounces that sit within the pits on our project, and then an additional 972,000 ounces of inferred. We also put out the first ever underground resource, 135,000 ounces, which again isn't an underground mine today, but it's proof of concept. It highlights the fact that we feel we've got some of these high grade chutes that plunge at depth on our project. Importantly, our grade on the project is 0.55 within the indicated, 0.65 within the inferred, so about 0.6 average on the project. But what drives this grade is the fact that it is a heap leach project. And when you look at heap leach projects around the world, you're typically looking at roughly 0.3 to 0.4 grams per ton. So we sometimes like to say that we're sitting on high grade heap leachable material, which is one of the big things that drives the economics for our project. That being said, if you tell me that gold's going to fall to $1,450, then we might as well all go home now. But in a scenario like that, we obviously could increase our cutoff grade to 0.55. We would then be sitting at roughly 500,000 within the indicated, another 580 within the inferred. So at over 1 gram per ton. So there is the ability for us to easily target higher grade material, but you'd never do that with a heap leach project when the economics drive lower grade. So that's the that's the resource on our project. As I mentioned, we did put out a PEA in 2021. We are in the process of updating this to incorporate that resource that I was just walking you through, and the project does have very robust economics today. If we look at it at a $1,650 gold price, which was the base case that we used for our economic study, you're looking at an after-tax NPV of 212, after-tax IRR of 42%. Anyone who's sitting in this room probably isn't looking at $1,650 gold, so why don't we look at it at an $1,850 gold price? You're now looking at an after-tax NPV of 300 million, after-tax IRR of roughly 54%. $100 million build, after-tax NPV of 300 million for roughly 100,000 ounces of production. Those are very attractive economics for a project, and I'd encourage anyone to come by and visit us and let us know of a project that has better economics than what we've got with our Enchi project. We've also done a lot of additional de-risking work on the project, so work that is starting to push a PFS, FS type level. MET work, for example, is something that all of you or most of you probably know is critical for a heap leach project. We've now completed over 20 column tests on the project. If we look at the 14 that average between 60 and 90 days, we're getting almost 92% recovery. So this material lends itself very well for a heap leach project. We've also completed a couple of pilot heap tests on the project. Again, roughly 92% average recovery coming from those tests. We've completed an environmental and social baseline study. We're in the process of doing condemnation drilling where the pad would go on our project. We're doing hydrological and geotech drilling. All of this stuff moves the project forward to a construction decision. In terms of upcoming catalysts, as I mentioned, we will get an updated PEA out in the first half of this year, which will incorporate that larger resource. My expectation is the overall size and production profile will increase a little bit, but also it's been meaningfully de-risked, and that'll come through in the study that we put out. We are continuing to do significant test work, MET test work on the project. We have put out some results on the sulfides, which were around 91, 92% recoveries, but we're doing additional metallurgical work there, and then we will get that environmental and baseline study out as well. Thanks.